Charlie, finally, you would get you on the show. Thank you so much for joining me.
Nice to be here. Thanks for having me, Andy. And can I just say, a very nice tank top. That is very
Thank you. You know, for the benefit of listeners who may be listening, 6 months down the line in January, it's currently the hottest day of the year. I am sweltering in the studio at the minute. Charlie revealed that he did have a tank top on, but decided to put a t-shirt on before. I've tried to convince him that that's okay, but
I
yeah,
felt, I
not
felt
not
that
well enough apparently.
two tank tops was too much.
He's in good shape though, I can tell you. You've been you have been training, haven't you? You're looking good, Charlie.
I have, yeah, but thanks.
So, Charlie, you need no introduction. It's been a couple of years since, well, we kind of, before the whole podcast thing kicked off, I did like a little live thing on Instagram and you were one of the guests, and it was great. I had a lot of fun chatting to you. Felt like just chatting to a pal in the pub. But if there are one or two listeners out there of ours that maybe don't know as much as I do about you, can you give us a quick intro, who you are, what you're doing in the industry?
Yeah, so my name's Charlie Sullivan. My property company is called Capstone Fox, and I live in Wilmslow in Cheshire, which is South Manchester. And I've been investing full time for probably nearly 5 years now. And prior to that, I was a chartered mechanical engineer in the subsea industry. So I was working in oil and gas and offshore wind, living up in Newcastle, up in the Toon, where I met my lovely wife G, and we have 3 kids, all under 8, and yeah, so we are fully out of our corporate jobs now after relocating back down to Cheshire and working on a variety of different projects. So originally it started with buy-to-lets, then we moved on to HMOs, and now we're doing a nice little mix of commercial conversions.
Fantastic. I've got to say, Charlie, I love following you and G and everything that you post because it's
Thanks.
just really natural. Like I feel like everything that you share and everything I see of you is like that is exactly who you are. You know, on and off screen. None of it's manufactured. I mean, correct me if I'm wrong, but you just seem like you're so family orientated. It seems really clear where your priorities are, which is the kids and doing your family stuff. And obviously, you work really, really hard building your property business, and some of the stuff you do is wicked. Do you think is that a fair? You think that's a fair observation, fair summary, Charlie?
Well, I hope so. I mean, I certainly don't try and put on a certain persona. I post about property, obviously, but I mean, let's be honest. Like a lot of property is really, really boring, um, and there's a lot of people out there already providing content and information on strategies and the nuts and bolts of property. So
Mm.
every now and then I stick in something that I just find humorous or interesting. I get a lot of people mention like what hedge. I post about hedges.
Literally, as you were saying this, I was thinking, I'm gonna have to tell Charlie every time I see a trim bush. Yeah, I
But
walk past a nicely trimmed bush on the street. That's what I mean. I
yeah,
think of you.
thank you very much. Yeah,
Yeah.
you're not the first person who said that to me actually,
No.
and
And also, when I'm trimming my own bush, I feel like I've got expectations to meet, which
yeah.
yeah, rarely as high as yours. You share some pretty good bushes, but
I've seen some good ones, yeah, and what I found is, yeah, I don't know, just part of it's just finding a bit of fun, bit of humour in simple things, and it's funny how many people enjoy that side of it. They probably don't even follow us for the property content, more just the hedge chat and anything else. So, but
well,
that's intentional. I put that stuff up because, like, we've all got a personality, don't we? We've all got different things that interest us, and what I try and put across in what we do is that we're a family who were in full-time jobs, have moved into full-time property. We enjoy doing interesting projects, enjoy the hard work and the rewards that come from doing property. But as you mentioned, my priorities are firmly fixed in my family, and trying to be the best dad and husband and all of that I can be, and be present in these years, because in 5, 10 years, life's going to look very different, and my kids are going to be older and will have left home. So yeah, it's kind of I feel like there's this window at the moment where I'm trying to make the most of everything in life, and yeah, it's a
well,
challenge.
I've got to say, yeah, it's a great example, and even for me, I've been doing this stuff a long time, but we're not there with the family stuff. And just before we kicked off, I said, that's something that Gem and I are talking about now and starting to plan. And yeah, I think you're kind of a great example of that balance, and that's the sort of balance that we want to achieve. But I think the first question I want to ask you is how do you manage it all? You've got three kids, Charlie. Are they all under 10?
Yeah, all under 8. Yeah.
All under 8. Okay. So yeah, you guys have got to have your hands full. You've got a pretty full on business. You're not just buying HMOs and stuff anymore. You're doing some pretty serious developments. You invest in different parts of the country. You do some consulting, some mentorship, and things like that as well. So you've got a lot going on, and I know how busy I can get. I feel really busy at the minute, really kind of snowed under. Every time something kind of lands on my desk, I clear it, and there's something else, and it kind of sometimes feels like walking through mud. But how are you guys managing all this? Is it as easy? Is it sometimes maybe looks or seems? I mean, what's the secret?
Oh, I don't know. Like, do you know? I think we're trying to figure out the best way to do all this stuff. And I think one thing being a parent does is it makes you very efficient with the time that you have. Like, you can eat meals in record time. You can get stuff done in 5-10 minutes that might have taken you an hour before. Like, you become a lot more efficient because you have to be. But it's definitely a team effort. Whilst we started the property business together, G and I, as the kids have come, G's taken the lion's share of a lot of that side of, the practical side of things with the family life, which enables me to focus on the property and kind of trying to be like the conductor in the orchestra. And I think where I see people do really well at property is you become very good at, this buzzword delegation and all of that. But ultimately, you need to focus on the things you're really good at, and anything else outsource or bring in help. So, all of the projects that I'm working on, I either have business partners or I have a team that I've spent many years building that rapport and relationship with, where they can shoulder the things that I'm just not able to do. And so that frees up that time for me to then be able to focus on the things I'm good at, which is predominantly, raising finance, stacking the deals, structuring them, and just like I love people. I love building relationships. Like my job before property was strategy and business development, sales essentially. So I have to keep reminding myself when I get sucked into like admin tasks that I hate doing, but I feel like, well, I've got to do them. Like, it's that discipline to go, it's not a high income generating task. You need to be able to try and outsource some of that. So in recent years, I've taken on a bit of help in the form of assistants and freelance people to help carry some of that stuff for me so I can focus on the other things. Not
So I suppose, yeah, I suppose it's an engineered solution, isn't it? And I think you've described it really well, actually, Charlie. I definitely know from my own point of view, the staff and the team and the systems and the processes, unequivocally, the ability to grow and scale is because of those things. And the more you have, the more tenants you have, the more properties you're refurbishing, the more money you've got out on loan, the more refinance applications you've got to do. The more that those problems grow, that sometimes the bigger that those problems can be, and you kind of have to evolve with it. And I think you've described it actually quite perfectly, really, and that actually a very engineered solution that takes time. And you still, I think you said, you still kind of just figure it out as you go along. Like you learn and you evolve and you adapt.
And I think as well, the things that need doing rise to the top, don't they? And I've got a never-ending to-do list, which frustrates me because I like boxing things off. That little satisfaction of like I've done it. But I have this constant battle with my inbox where I'll star an email, and I'm like, I'll sort that out. And like I've never got to the bottom of the list of starred emails, and that's like
weeks later they're still there, aren't they? And I could look in my inbox now, and it's exactly the same. I flag mine actually. I don't star them.
Well, yeah,
I flag them and pin them to the top.
Yeah, but what I've found is I'll go back, and when I do get a bit of time to like try and go through them, I realise some things that I thought were important months ago have either just been answered through ignorance or like ignoring them, or they've just that I've ended up picking up the phone and doing something. So yeah, it's the the important things do rise to the top, but maybe that's not a great strategy to get the most things done.
I actually totally agree with you and see a lot of similarity there because things, emails are one of the things where you can just be buried, just buried in admin, and sometimes you've got to focus on those priorities, those things that you've got to do that day, got to do that week, and people have got to wait, and other tasks have got to wait, and I find the same often. They just have a way of figuring themselves out, and a lot of stuff tends in retrospect to not be as important as you, like you said, you thought it was, and I think that again that's something that I've learned over the years in business. I guess this is a nice segue into a question that I wanted to ask you. You've got loads of experience in property now, and you've also got a lot of experience, in the corporate world, a lot of life experience. And I think you're well positioned to answer this question, Charlie. I try not to put our guests on the spot on the show, and I hope this doesn't put you on the spot. But what would you say? What are the ingredients of a good property investor? I suppose we're in 2022 now. The market's different. What if you had to describe that? What would you say that it looks like?
I think one of the best attributes is being able to consistently follow a plan day after day. With all the knocks and hits that you take in property, it's easy to get initially excited about something, but then fizzle out very quickly like a firework. But I think where I see the most success in what we do is the small actions repeated over a long period of time. So I refer to it as like plodding. I think plodders make really good property investors.
I love that.
And actually the ones that make the most noise, it's almost like they say, like at the scene of an accident or something, the people screaming, saying they're really hurt. And normally the ones that aren't, it's the ones that gone quiet, they're the ones to look at. And that might be a strange analogy, but, I think with property, and when I work with people one-to-one, I think the people that look more at the long term, as opposed to, I need a deal right now and I'm getting desperate, the ones that look at it longer term tend to be the ones that succeed, because it's that mentality of, look, it's just going to take what it's going to take, but I'll get there. And the biggest battle is in your mind, because the strategies are out there, aren't they? Let's be honest, anybody can go find out how to stack a buy-to-let deal, or or kind of get the bare bones of doing certain deal stacking and finding properties. But I think the real sort of ability is in being able to kind of consistently stick to that plan over the long term, and it's that mental battle to keep your head in the game.
I completely agree with what you've just said, Charlie, and it's funny that you mentioned that word plodders, and not to use it in a derogatory sense at all, but my non-exec, kind of a good pal and my mentor JP, he's got a lot of staff, and many years ago, I remember when we were first recruiting, JP we talked about the roles that we needed, and what I wanted to recruit was a rock star, and that's what John described. Like he said, look, what you're designing, what you're talking about is you want a rock star. You want someone who's going to be like, wow, can do all this stuff, shines brightly, but those people are kind of difficult to manage and sometimes hard to focus in on the important stuff, the mundane stuff that actually allows businesses to move forward. He said what you really need is you need plotters. You need people who you're aligned with your long-term visions, people who can get their head down and consistently do things reliably and really well. And I think over the years, I've developed an ability to do that. It definitely, I wouldn't say, it has come naturally to me. I found it very difficult not to kind of reach out for the next big exciting thing, but I've actually found, and I think just through, on reflection and through the results, that actually where I've been less focused on the here and now and more focused on the longer term objectives and the consistency piece, performed much better. Is that something that's come naturally to you, Charlie? Are you more of someone who is naturally quite consistent, or is that something you've had to train yourself to do?
No, I'm quite impatient.
Yeah.
And I think if you come from a sales background, you're used to sort of effort in equals results out. So,
Yeah.
and you go, well, if I throw enough stuff at this in the short term, I should see some results quickly. And that was a big mindset shift for me in property, was, look, sometimes you need time. Well, not sometimes, all the time, you need time to work in your favor with property. and it's a really powerful tool that a lot of people miss out on. So take, for example, you're looking for your first deal, like, and you put an offer in, it gets rejected. Initially, you feel disappointment because you think I've done something wrong or I haven't pitched it right. But you need that 3-4 months for that offer to marinate. And I talk about like get the rods in the water, like fishing, and get as many lines out in the water as you can, like strategically in the areas and the properties that you're interested in. But you have to check them regularly, and that 3 months or 4 months can play into your hands. And what a lot of people don't realize at the start of their property investing journey is that time is really important. And so they get stuck into it, throw a load of effort and time at it for a month, and then go, this doesn't work, I'm going to give up. But what they don't realize is those little seeds would come to fruition if they just waited 3 or 4 months. Most of them might not, might die. Somebody else will buy it or whatever. But you only need one. You only need a couple of deals to get going. And so I really had to learn that, and I was a bit all over the place initially. I tried to do a lease option on a building owned by the Scientologists, and it was an amazing location up in Gateshead, and this thing was a wreck, like an absolute money pit. And I just had it in my head I'd buy it for £1, and it would be an amazing story. And I even went to have a pint at the pub next door one night on a reconnaissance mission. And I just had I was looking at everything. I was all over the place, and eventually somebody sat me down and was like, "What are you doing?" And I was like, "Wow, there's deals, opportunities everywhere." And they're like, "You're just a busy fool. What you need is a plan. What's the figure you're aiming for per month to leave your job or cover your bills or whatever it is, and what does that look like in terms of number of properties and cash flow on each deal?" And it was only when I started to put the blinkers on and focus on less that I got more out of it.
I think that is such a good point to highlight, Charlie, and I'm sure all of our listeners will take that away. Actually, sometimes focusing and doing less, results in much more. I think there's a lot of similarity between you and I, Charlie, because I found that has been the case with myself, and actually, I remember when I was starting out, I started with the HMO stuff, and then I got a bit excited and carried away with that, and then all of a sudden I wanted to do these deals like the ones that you were describing, and tried to. I mean, I lost 20 grand on a site once that we'd secured under an option and tried to get 6 houses on it, and I didn't know what I was doing, and actually it took a huge amount of my time and effort, and I lost quite a lot of money on it in the end. It went through to appeal. This went on for like nearly 2 years. And actually, in retrospect, now, sort of several years on, like 4 or 5 years on from that, I realised I just shouldn't have been thinking about that. What I should have been doing was actually um, working on my actual business, the stuff that was working well, and taking baby steps forward. So just taking, just and celebrating those little wins step by step, because actually it was those small wins in the end that accumulated and turned into bigger wins, and then I've eventually been able to move on to the bigger projects and some of the other stuff that's challenged me, and I can see that you're doing the same kind of stuff as well, aren't you? You're developing much bigger commercial projects now than you were when you first started, like the HMOs and things.
Yeah, and they're no walk in the park, are they? It's there's a lot of moving parts, and like I'm learning stacks on what we're doing, and even to some degree on those. We secured 2 deals in lockdown, and I look back now and think, I wasn't necessarily looking for either of them, to be honest, And the part of me wonders, like, was I a bit bored in lockdown and just thought, yeah, go on, let's just do it. And yeah, and so even then, years on from starting, you still have these blips and moments where you just kind of fall back into that place of, maybe that was ego kind of saying I want to do a big deal. But I always knew there'd be a lot of learning on them, and also there's a thing. What I like in property is that you creatively you could scratch an itch. If you want to kind of explore serviced accommodation or holiday lets, or maybe you're really into interior design and you want to sort of flex those skills on a property. Property gives you that opportunity to do that. And I'd always kind of had my heart set on doing up some nice buildings, and further on, I want to be doing some land stuff, but I'm certainly a little more reserved on jumping into that just yet until I've seen these projects through.
Has your focus in the earlier years of kind of building your business been been predominantly around cash flow, or was it actually building equity, or was it a combination?
No, it was cash flow. It
Wow.
was, we were frustrated in our day jobs that we were unable, like, we had great jobs. So G was in banking, she worked for Virgin Money. It was, great employer, really good place to work. I worked for a company called Techmar, who were an up and coming, and we were in a big growth phase, subsea company. And I got in at a time where I was able to kind of build up a department and become a senior manager and a shareholder in that business. And it was great, like really good jobs. But the trappings of that corporate life, of having to be somewhere at a certain time and work till a certain time, and then having to travel all over the world and miss key moments in, I missed my daughter's first steps, I nearly missed my son's birth. That was largely my fault because I went to Malaysia 3 weeks before G gave birth. But you know, anyway, it was a moment of like, actually, what are we doing? What are we working towards? If not more time with the family, and we looked at the roles that we would be aspiring to do next, and it was more time away from family, more responsibility and expectation to deliver on targets that were actually out of our control. They were like company performance targets linked to the oil and gas market, or the offshore wind market. And yeah, we just hit this point where we were like, we need to do something else, and we need to create a side hustle, residual income that will enable us to carry on working if we want to, or do property full time. So the initial target was just to replace our basic bills. It was like, can we get to $2,000 a month? And that should cover mortgage, gas, electric, water, and council tax and internet. And that was when I said I sat down with somebody. It was like $2,000 a month. G was pregnant with our second, and I think our target was 6 months, purely because of that deadline. And that was it. That was the bones of our business plan. Back of a fag packet, let's go for that. And it worked out as 1 HMO and 4 buy-to-lets. And so we went nuts viewing everything. I think we viewed 120 properties in 3 months, and which actually, like, is very achievable. Like 10 properties a week, between two of you. So we just researched during the week, set up viewings on the weekend, and we took holiday. So a lot of people like to go abroad. We went on holiday to Sunderland.
Viewing smelly houses.
Yeah. But I think we viewed 20 properties in one day once, 10 each. And we had loads of time in between. We met for coffee and lunch, and like, because it doesn't take you long to view these, once you get into it. And a lot of them were close together. So that was the kind of initial thing that we did. And then we just went, well, we've hit 2, let's double it, and let's double it again, and so on. And then things have changed now, but that was the original kind of goal.
My absolute favorite thing about the podcast, and what I get from the podcast, is listening to people like you, Charlie, kind of take us back and just kind of reminisce over how it actually happened, and how it all came to fruition. Because I remember doing it all myself, and those initial viewings, and then, like, I remember sweeping up on the first building projects, and like helping with the builders, and I remember how little I knew. And actually, I've always kept a record of like the goals that I've set, and the targets that I've kind of set myself, and then what I've been able to achieve each year. And I like to regularly look back in fondness of the progress, actually. And sometimes when shit's not going well, and you get frustrated, and you get down, and it's difficult. It's easy to say don't get emotional about it, but it is difficult not to do that sometimes. And I often like to just remind myself, actually, just remember what this was, 5, 6, 7 years ago, and whatever it is, and look at how it is now. And I think also, I love to set goals, and what I've always found is that target has always been a certain distance ahead of me. I don't know if you find this, but it's interesting to hear you talk about that initial £2,000 target, and I think mine was probably something similar. But now, the goals kind of remain relative, but push me equally as hard, and I feel like that will never change. I always just need something that's not quite in touching distance, but um, you know, just achievable enough to make me kind of still keep working. And I've actually found over the years that that's been the biggest motivator for me. Now, initially, I think it was probably a necessity, like that those first few thousand. So I didn't have to be a physio, and perhaps in your case, so you guys could get out of the roles that you were in. But it's different now, and the objective's different. But still, I think it's that constant challenge that I like to set myself that keeps pushing me forward. I mean, how do you have like a drive like that internally? What keeps pushing you? Because
Yeah.
you guys could stop Charlie, or you could slow down, but you appear to be doing the opposite.
Um, yeah, it's changed. It's morphed. Like I think now the big plan was to kind of have the option to get out of our jobs, and then we decided to move down to Cheshire. So we did those things, and we took on a big renovation, and we've moved again since then. Now the momentum shifted really to like initially starting with just building a cash flowing portfolio has now developed into like a group of companies that include, individual projects, but I've also got like a consultancy now, which is a business in its own right, and there's marketing and then admin and management of all of that to do. But we try and keep at the forefront this thing of it was all about creating time and space to do what we want to do with the kids when we want to do it, and wider family and stuff. So the goals now aren't financially driven in the sense of we need to get to a target to enable us to leave something. It's more like we're a lot more selective now. So stuff that's maybe kind of a better return on that time invested. So we've got quite a good setup in the Northeast. We've got a great team up there. We continue to buy and renovate properties, but it's a lot more hands off. So that's great because I can do my bit down here. Got a great team up there, and ultimately that's a great return on time invested. The stretch targets now, we're starting to talk about like schools. I've got 3 kids.
Okay.
Like, what schools are you going to
Yeah.
go to? Like, it was only yesterday that my eldest was born. Now she's 7, and it's like, it won't be long until she's at secondary school. We have to have those chats now about what do we want for them. It's not cheap if you want them to go to private school or not. So, we're trying to that now becomes our focus of like, what do we want life to look like in the next 2, 3, 4, 5 years? Because we've got to put those things in place now if we're going to hit that. Because you'll know, like we've seen the power of that. I look back at we wrote some goals down one New Year, and it was like we wanted to move to Cheshire and live in a certain size house. And I remember that feeling like a massive stretch target. And it was like, there's a book, I think it might be Jim Collins maybe, or Stephen Covey, talks about everybody should have a BHAG, a big hairy audacious goal. And that was one of our BHAGs, was like we were like doubling the size of property that we were in at the time. And like I look back recently, and actually what we ended up going for was we managed to secure was even bigger than that. So I think these stretch targets just give you that vision, that lift to kind of open the box, so to speak, and really like let your creativity go. Because why can't you go for big goals? Who put those restrictions on you?
Yeah, it's really interesting you say that, and as well, I find that often you can surprise yourself. You just, what? Actually, look at what we have done. Look, actually, we are capable of this, and I think you see other people doing some of this stuff, and you often think, have they got something that I don't have? Do they know people I don't know? And I think often they're excuses we can put in front of ourselves, their hurdles we can kind of put in front of ourselves. But I think when push comes to shove, if you really want it and you really commit and you put the work in, I think a huge amount is achievable, and you're a great example of that. I mean, we've got a case study to talk about today, which I'm really keen to talk about, and I know that it's not. Well, there's an interesting story to it. But before we do that, I just want to ask what you think about the market looking ahead, Charlie. I've not asked anyone this on the show yet. I think actually it's felt kind of pointless for the last couple of years to do that, because everything has seemed like it's only going in one direction. Economy's been positive. I know that you've got interest in the markets and stuff, and you're I assume really in tune with the market and think about this sort of stuff. You're developing, so values are important to you. And do you have any thoughts on what's happening in the wider world at the minute, and is that shaping your view or your I suppose your approach to anything that you're doing at the minute?
Yeah, I think I think obviously it's uncertain times. I think there seems to be a lot of moving parts at the moment, and there's part of me, like everybody, where you think, oh, you get that sort of ominous feeling of what's going to happen. I haven't got a crystal ball. I'd love to know what's going to happen in the next few years, but like a couple of things. I think, firstly, I think uncertainty in the property market can be a really positive thing if you view it that way. There's always somebody making money, and there's always an opportunity. When you look at different strategies that have come out in the last few years, like things like holiday lets and service accommodation have gone through the roof, probably driven largely by lockdown and a lot of people staying at home, going, it's not that bad in this country if the weather's nice, things like that. So I think kind of looking like forward, we've got cost of living going up, we've got inflation that's really high, we've got political uncertainty, with everything going on at the moment there, and I'm definitely seeing a softening in the market. I wouldn't go as far to say it's a dip or sort of onset of a recession or anything, but I think we're seeing that backlog from lockdown and people just being desperate to buy and park cash slowing. Maybe as people are looking, well, firstly, it's like summer holidays are starting, so a lot of people maybe got their mind on going away, and secondly, maybe people are looking at kind of as we get towards winter, cost of living, heating, and all of that stuff, just being a little bit more cautious about what they spend. But ultimately, it depends, I guess, on what level of the market you're looking at. If you're looking at £1 million home, that market is going to be very different to, say, 100 grand terraced house. So I think my kind of overall thought on it is, I don't feel like we're going to see a major recession anytime soon. One will come in the future. I just don't think it will be in the next couple of years. I think there's a softening and an adjustment. But I always have this thing in the back of my mind. My dad used to say, we live on an island, albeit quite a big one. It's got a rising population, a shortage of housing, and ultimately it's a very desirable place to live in the UK. So I think if you are providing good quality stock, there will be a market for that. And I speak to people who were building luxury houses in the 2008, 2009. And, whilst there were adjustments, like people were still buying, there was still money floating around. And I just don't think you should fear the what if, actually embrace it and go, when it happens, whatever it is, however it looks, I'm going to try and look for my opportunity in it, because there will be opportunities. And as we've seen with the sort of, the follow on from coronavirus, I was like, the world was going to end. And look at like people made tons of money because of it, And I think if we all look back now, we go, flipping heck, wish I bought loads more in the lead up to it. But we've only got the future ahead of us, so we might as well buy more now.
I think that's a really well balanced answer, Charlie, and I think it's actually very nice to hear someone like you who's not just saying it from the sidelines. And I think it's easy to see these tabloid headlines and people kind of pushing a narrative that kind of maybe suits a cause, like selling a course, and actually hearing it from somebody like yourself who's actually in there buying, you've got developments on, you're well aware of what's going on. It's kind of quite comforting in a way. And I think the point you concluded on, which was, look, there's only so many houses in the UK. It's a desirable place to be. Focus on creating good quality, good value for money accommodation, and I think that's kind of how simple it kind of boils down to. Now, actually, if you do that and you do it well, and I've always thought this in the HMO market, actually, if we do that and we do it better than anyone else, we're almost definitely going to be okay. Like there might, we might get a bump here and there, but it's not likely to fall flat on its face. And I think as long as people, I mean, just to add to what you're saying, I think as long as people are cautious with things like values and the costs of money and stuff like that, and don't bite off too much, more than they can chew, or are overly optimistic when they're appraising deals, because the energies thing is definitely a big consideration at the minute. It's gonna take a chunk out of any kind of margins on certainly HMOs and SAs. But I think keep it simple. Just focus on, like you said, just good quality accommodation, good locations, and just do it really, really well.
Yeah, and we have like a spread as well. That's another thing we've sort of looked at is, diversifying into other strategies to because you get a good barometer of the market then if you're in buy-to-lets or HMOs, serviced accommodation, apartments, houses, whatever it is. across the country. Like it gives you a good idea of just where each sort of level's at, and yeah, and then you can always ramp up in certain areas and say I'm going to focus more on buy to lets over the foreseeable, or I'm going to double down on HMOs. So yeah, certainly interesting times, but don't panic.
It's interesting. I gave you an opportunity, Charlie, to kind of highlight some of the big issues out there at the minute and reasons why maybe not to do this and that. And actually, the first thing you said was really positive, which is actually this is more than likely for the people who are prepared. You know, an opportunity. You know, if there is a slowdown, if things do change, actually, it's likely to present opportunities, and that's kind of where you want to be. And that's certainly where I'm trying to engineer things at the minute, is to be, you know, in a cash positive position, to have the capacity to jump on deals, and really worked on some of my partnerships and businesses with, you know, with certain people to help us get into a position to do that. And I'm, you know, yes, there's stuff to be, you know, sort of keep an eye on, and there's some pretty scary stuff happening in the world. But I think on, you know, on the property field, actually, I see the same as you. I think there's definitely some opportunities, and if you play it right, there's people could do quite well like they did in COVID.
Yeah, yeah,
Let's talk about this case study of yours then,
yeah.
Charlie. It's an interesting story. So for our listeners, obviously, of course, Charlie's case study is in the roadmap. It's fantastic. It's got a brilliant picture of Charlie at the top of the case study, not in front of this project. I don't think that's not you in front of this building, is it, Charlie? It's you in front of one of your developments,
Yeah,
isn't it?
yeah, that's the Beeswing Hotel. My cheesy little
Yeah,
cheesy point, but yeah.
love it. It's great. Well, tell us about this project then, Charlie. This case study.
Yeah. Okay, so this property came to us actually through one of our letting agents, but it was a letting agent that we use in a different area for different strategy. That it was an agent in County Durham who we use a lot for buy to lets, and her father was part of a church that were looking to sell a property that they owned. It was a former manse, which you might sound impressive. It's basically a 3-bed terrace house that the church had owned for many, many years, and they were just at a point where they were looking to sell it. So they'd drawn up a sort of like 1 or 2 page document with some pictures and an asking price. And I believe the intention was to put it to an agent and market it. And you know, having been in this for a few years, like speed is everything. And as soon as I was passed it by the agent, I got straight on it. It was in an area I was very, very interested in. I could tell straight away, you know, from the front of the house and just looking at the pictures internally, that there was potential for us to do something with it. And so we moved quickly to get a viewing and then wrap up a deal within a matter of days. And I think it worked really well for them because they didn't have to mess about with, you know, lots of block bookings and dealing with agents' fees and things like that. And it worked great for us because it was something we were kind of looking for, and came at the right time.
Do you think that is that something that, you know, that relationship with agents and that ability to kind of maybe put yourself at the front of the queue, or kind of front of mind, is that something that you've been able to benefit from more than once? You know, is it beyond just this deal over the years?
Yeah, certainly with letting agents, because they have access to a lot of landlords, you know, they're either already managing portfolios for, or they get asked by a landlord, look, I want to sell one of these or something else, and they're going to think of investors and developers that buy, and so my thing is always to you know, give really good, clear feedback, always be willing to look at the right thing. If it's not right for us, they'll say it's not right for us. But you know, the worst thing you can do is to be sent something and just ignore it. You know, I think that kind of building that relationship to say, oh, Charlie will have a look at that, and then I'll look at something, be able to do very quick analysis on it, and it'll either be, yeah, that's something we'd be interested to look at, or no, that's just not one for us. And that over a few years has meant that we've been able to get some of these opportunities.
So I think you paid 116,000 ish, something like that, for this project. You had some obviously stamp duty and things like that. So and then it was a big refurb. You know, I often think like, so your refurb was just under 100,000, wasn't it?
Just
Big number.
I mean, I like
Just, yeah, it's like 99. 99999. No, it's like 99,449. So yeah, just under a hundred
Yeah.
thousand. Was that like the absolute? We are not spending more than 100 grand on this
No, I
house,
think we originally thought we'd spend 70 or 80, to be totally honest
right?
with you. And two reasons it went over. One, we could, because it was something that we wanted to keep long term. It was a bit of a flagship in that area for us as well, and we just went right back to brick. And it was quite a small footprint already. It was only 118 square meters, and the way that we completely reconfigured it, moved the staircase, reconfigured every single room, so it was essentially just a shell when we went back to brick. And even the walls that we put in were not wooden stud walls, because they would have been too wide. We went for this metal frame stud,
MF,
which is what
yeah.
you would usually use on a commercial conversion. And these are thinner, but you can still put the same amount of acoustic boarding and fireboarding in. So, like, just trying to like save space in every area, and we were determined to get 6 en suites out of it without extending externally. So one of the reasons was the level of work, and probably the other reason was we went a little bit higher on things that we wouldn't normally have done. So usually I might part tile a bathroom, but we went fully tiled. Cat 6 data points in every room, TVs in every room, not just the beds and wardrobes. We all know the clever marketing tricks those HMO investors use, where you put one set of bedding in a room, take a photo, move it to the next room. No, these had full
Guilty.
hotel grade bedding in every room. So yeah, and it was just like, as things went on, we thought, well, let's not cut corners, let's do it right. And I think we also suffered from like increased material costs. This was kind of end of 2021, so that didn't help either.
And so just looking at your reval, 230,000, and actually you were all in for like 228. So
Yeah, it wasn't far off. Yeah.
and was that disappointing at the end for you, or is that fine? It almost irrelevant.
I sort of have this mixed relationship with like valuations, in that I think with HMOs, we did go for slightly higher. The challenge was, in that area there wasn't a lot of comparables for HMOs and the level of HMO that we were doing. So I think we went for something like 260, and in the end it ended up being valued at 230. And the valuer was actually a great guy. I had a great rapport with him, really good chat about everything. I never go into these things like pushy, like this is what we want. He obviously knew what we'd asked for, and he could tell like the quality of the build was fantastic. He was really complimentary of that. I think he agreed with our rental figures. The only difficulty was kind of justifying a higher valuation based on the area. So in the end, he gave it a bricks and mortar valuation plus 20% as a kind of nod towards the increased rent and things like that. And initially, yeah, we'd have liked higher, to pull more money out, but having a lower valuation meant that we had a lower mortgage, which was a higher cash flow. And I always have this thing of like, there's no guarantee it's going to go up in the next few years, particularly if you've done it as a HMO and you've got maintenance costs and all of that and upkeep. So I'm not, I was quite happy with it. We're still we were close to 30%, I think, 27, I think it was on the numbers. So within 4 years, kind of get the money out, and knowing it is probably worth a bit more than what it was valued at, was quite happy to crack on.
Well, those numbers, Charlie, are pretty much where I am on all of my HMOs now. I actually don't prioritize at all the end value of my HMO or what I can recycle out. It's nice if I can. Actually, I tend to not try and do that aggressively. I'm quite happy to wait 2-3 years to kind of to see if there really is any great benefit. But I still think those numbers are great, and I think maybe it comes back to what we've already talked about, which is actually the priorities have changed a little bit for you, and actually you don't need to be as aggressive on that. And actually the focus is on making this property really, really great.
Yeah.
6 en suites. I'm looking at the photos now. It's an amazing project, so it's difficult to imagine that you're ever going to have any issues. Well, we'll come on to it, but certainly as a HMO, with filling those rooms, and actually the cash flow. I mean, the cash flow. It's grossing nearly, I think, £3,000 a month.
Yeah.
which is pretty incredible, really. I mean, that's yeah, like a gross rent of 35,000. That's more than the average salary in the
Yeah.
UK. I know there's some costs to come off that, but it's fantastic. So tell us what's happened since then. Project looks great. You've done your refinance, and what's happened since then.
Yeah, so as I mentioned before the call, I wanted to share this one as a bit as a case study because actually, one of the things that I always try and do with our properties is, well, pretty much all of our HMOs have always been in newer areas for us, and maybe a little bit outside of the obvious HMO areas, and because the you can look on a map, you can look at the stats and know that look, this will work. Like there's great employers nearby, young professionals would love to live here. There's really good connections into the towns and cities. So that's always been my focus. And this was another one of those things where we hadn't actually done much in this area before, but just knew it could work for that. Now, so the initial plan was we're going to go professional HMO. But then I kind of got a little bit distracted with the potential of trialing it as something that could be used for contractors, and as opposed to young professionals. And so we started off with that as the chosen strategy to say, let's look at
So
renting this out more on a short-term basis.
okay, so not as a HMO as you and I would
Yeah,
typically think about, more on a short term, kind of like an SA, or maybe an
yeah,
SA for like, but with the end user in mind being contractors.
yeah,
Okay.
yeah, and maybe fill in the gaps with some holiday makers and things like that because the location's great for that as well. And on paper, it looked great. Like as a lot of these things do, even with like higher management fees and costs and things like that. But we trialed it for a few months, and it just didn't really ramp up and meet the expectations that I had to sustain what it needed to justify keeping it as that strategy. So that's why we've taken the decision to switch it back to professional HMO. And like I take that as part of the learning. I've learned something about the area and about the property and about that market that I'm now actually we've actually bought something on the same road that we're doing a little bit differently that will service that market a lot better. So there's kind of two things going on here. I realised that having a 6-bed all ensuite HMO is great if you've got 6 workers who all want their own space, but inevitably you're going to have varying sizes of groups coming up. Sometimes we'd only have 3 people there, sometimes 4, on the rare occasion 6, and so you rent the house as the house. So it's quite expensive if only
Yeah.
3 of you stay in or 2 of you,
Okay.
and it's not really set up for families. If you've got kids and if we did get a holiday booking, then you've got all these fire doors closing behind you all the time. You've got a smaller communal space. Every room's got a TV, and it's more set up like a kind of boutique hotel as opposed to a large entertaining space if you've got family. So I think what we kind of learned through that process was it wasn't necessarily the wrong house. It's just we'd restricted ourselves on it only really worked at best to a large group, and we didn't have a backup plan, unless we just slashed the prices all the time. So what we've done is we've actually bought something down the road that's a very similar sized property, and we're converting that to a 3-bed, 2-bath, but like much more space. It's got a separate living room. It's got a huge kitchen diner. It's got a separate utility, and like it's even got a little conservatory. And so what we're going to do with that is we can still offer that to contractors, and we can offer it on a lower nightly rate, but the occupancy rates will be higher, and it doubles up as being much more suitable to couples or families that want to stay there. And then we switch the 6-bed all ensuite back to a professional HMO, which, as I mentioned, was the original plan. It's fully licensed. It's got all the right regs and approvals, if you like, for that strategy. So all is not lost. It's been a lesson and a learning. There's no shame in that. And sometimes you kind of got to test these things to know if they're going to take off or not. And it's just caused us to kind of switch it a little bit.
It's completely. It's funny you say you shared this as an example today because I didn't know you were going to talk about this one or this was the story behind it. But Mark and I, you know Mark, one of my business partners. We're just finishing a project, and the 5 flats. We're going to trial them as service accommodation. So for me, it's my first foray into it as
Yeah.
well, and it definitely does feel like a bit of a gamble. We've done a bit of research. We've obviously spoken to an agent who naturally, is telling us that the SA thing is good and will work. That's their business model. But we don't know. But we're also prepared to kind of get it wrong and fail and learn from it and just do it again. And we actually got approached by a company who were interested in taking the whole lot, and we felt like we wanted to push it a bit more. And we'd also like bought all the furniture for it as well, and like we kind of committed to it. We thought, no, we're going to stick to the plan, as tempting as it was. So yeah, I mean, maybe in 3 months' time, I'll be able to tell you, Charlie, whether it's worked for us or not, and it's a different area. But I think being prepared to trial things, and also I think even more important than that, to know when to say actually we've got to change it again, or we've got to accept that this isn't quite working, and change your plan is so
Yeah.
important. And I think talking about those, going back to our earlier question in the podcast, my question for you about what makes a good investor, I think that's a really good characteristic to behold, is knowing when, or being, not being too proud to say, what, I kind of not got this quite right. It's not panned out in the right way. I'm going to change that. And you can imagine if you had investors and people to talk to, that might be an uncomfortable decision for some people. But I think sometimes you've got to be prepared to do it. And if you can, it'll be okay. And I'm glad to hear that. Well, I mean, looking at the project, this is going to work so well, and it's great to hear that, and hear that it is, Charlie. But thanks for sharing that case. So it's a really interesting example, and not one that we've kind of. I don't think we've talked to anybody about anything similar on the podcast before. We do lots of HMO projects that have had their ups and downs, but this is quite unusual in that you tried a couple of things on it.
Yeah. Yeah, and I think you hit the nail on the head. It's the with property, it's being able to make the kind of tough decisions at the right time, and often you have to do it sooner than you think. We let things drag on a bit too long, don't we, at times, and convince ourselves
Yeah.
it's other reasons. But in your gut, like, and you've got to follow that. And if it doesn't quite feel right, you listen to that inner voice, because more often than not, 99% of the time it's telling you something you need to listen to. So
Yeah.
that's what we're going to do, and I'm excited about it, because I've gone, okay, I've tried this, that's fine, and now we'll try this, we'll do this other thing, which was always our plan A in the first case. But and that's the importance of having multiple exits as well. I always encourage people I work with, like, yes, have your thing that you want to do, focus on that, but just what's the plan B and C? What's the fallback if and when something don't quite go well? And if you can go into a deal with 2 or 3 exits, you're laughing, aren't you?
It's kind of infectious talking to you, Charlie. You're so positive about stuff, but so so well researched, and you clearly know what you're talking about. And we could talk for hours, I'm sure. I certainly feel like we could just go on and on and on talking about property. And I think there's definitely another episode in here that we've got to get you back on for, Charlie, because I feel like we've only just scratched the surface. But it's been just listening to you, and sort of getting some of your opinions on the market, and hearing about what you value, and what you think makes a good investor. I think I've really enjoyed today's show. So thank you so much for coming on and sharing it. We should have got you on well before now, but I know you're a busy guy. But yeah, can we get you back on in the future? I think there's a round 2
Yeah, of
here.
course. I had a blast, and thank you very much for asking me to be on. I'm by no means at the top of the mountain. I'm learning all the time. I still feel very young in my property investing career, and I think hopefully it doesn't come across that I'm trying to be a know-it-all about anything. I like to learn things. I like to learn from my mistakes and share successes and failures and things like that. And ultimately, if that can help people maybe a few years behind, who are on the up, coming through, then great. And yeah, I'd be more than happy to come back on. Thanks for having me.
I have no doubt, Charlie. I mean, yeah, I've been doing this for a long time, and just listening to you, it gives me ideas, and I think just reassures me in a number of things as well, and sensor checks a few things as
Yeah.
well. What can we expect in the next 12 months then? I know you've got a few pretty
Yeah.
juicy projects brewing, some cool stuff. What can we expect to
So
see?
definitely delivering those projects, the big ones, the chapel conversion and the Beesring Hotel. You know, we secured those both in the middle of 2020. So, you know, they've both taken longer than we would have liked, but we are where we are. We're motoring ahead on both of them. So the plan over the next 12 months is deliver those to the best of our ability, do the best products that we can. And then in the last few months, really, I've taken some steps to create a bit of margin and headspace in my life to just dream a little bit and focus on some things that might be in property, you know, some deals that we'll look at and do. I want to make the businesses that I've got robust and streamlined where possible, you know, focus on those things. But then I want to focus some time and energy in a cash flowing business that is maybe outside of property. I think property is a great way to soak up a lot of capital, but I've seen the power of building a very profitable business in the subsea industry, and I don't think you can get anywhere close to those kind of levels just by buying and refinancing or selling property. So I think that's something I'm keen to do. Don't know what it is, you know, maybe it's selling a product in high volume, maybe it's investing in somebody else's business. I don't know, but I'm open to it and I'm excited to think about something a bit different. So
it sounds exciting. Charlie, thank you so much for coming on. It's been an absolute pleasure. I knew it would be, and I cannot wait to see what you do the next 12 months. I think we need to go out for a beer. Keep us up to date with, you know, how those bushes are looking, you know, and keep us all laughing, keep us all smiling. But thanks so much. Mate. It's been an absolute pleasure.
Take care. Thanks a lot. See you now. Bye.